This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora, and welcome to Thursday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news that despite good economic data, Wall Street equity prices are tanking today as it dawns on investors they have been far too bullish on AI prospects. But first, there were July flash PMIs released today. The American one is quite positive, especially for their services sector. Their new order growth rose its fastest in a year, and that drove the overall PMI to its best result since April 2022, a 27-month high. The factory sector wasn't so positive though, basically marking time. Encouragingly, however, despite the rise, price pressures have waned. But there are suggestions employment has stopped growing too. Retail inventories might be becoming a bit of a problem, however, up 5.3% from a year ago. But because wholesale inventories are well contained, there is no reason to panic at this point. Meanwhile, things are not so bright in their housing markets. Mortgage applications fell last week from the week before to be 15% lower than the week a year ago, even though mortgage interest rates retreated and are now near their lowest of the year. And new home sales came in quite low in June, well below anticipated levels. But this isn't a new situation. Overbuilding over quite some time means they now have a stunning 9 months of inventory of new unsold homes at the current sales rate. The main problem area is in the northeast states. And American exports rose 4% in June from a year ago. Imports are up 3% on the same basis, meaning their merchandise trade deficit shrank a little. The still rising import levels also mean that the healthy demand in the US economy is still the main driver of world trade. And there was another very well-supported US Treasury bond auction overnight, this time for their 5-year note. That delivered a 4.05% yield, down from 4.27% at the equivalent event a month ago. General market support for these debt issues remains impressive. In Canada, their central bank cut its policy rate by 25 basis points to 4.5% at its overnight meeting, a second cut in a row. Another cut in September seems a live possibility. They say the reduced rates could contribute to a slowdown in mortgage and shelter costs, which have been a large component of inflation there. Japan's July factory PMI actually slipped slightly below expansion levels in a very small contraction, an unexpected result in their market S&P survey. But their services PMI went the other way, with a solid expansion recorded for July. In India, new orders and business activity surged in July, driving both their services and factory PMIs to a very fast expansion. And that brought their best expansion in employment in over 18 years. But because these pressures have been rising for some time, they're starting to get strong inflationary pressures from them now. India's soaring share prices and the earnings growth by Indian companies have pushed this country to just under a fifth of the MSCI Emerging Markets Index, while China has fallen to a quarter, down from more than 40% in 2020. India is threatening China as the main emerging market. And South Koreans are increasingly confident, according to a survey released by their central bank. Their composite index rose to its highest level since June 2023. Consumer sentiment regarding current living standards rose, as did their future outlook. In Europe, though, their flash PMIs in July sagged to a 5-month low. In Germany, while their service sector is still expanding at a good clip, even if it is less, their factory sector is really struggling now and contracting at a rather sharp pace, which will worry Berlin policymakers. In Australia, the July PMI also recorded a weaker rise in services activity and a sharper decline in manufacturing production. Persistent demand weakness led to a second consecutive monthly decrease in new business and the fastest fall in new export orders in nearly 4 years. The US Treasury 10-year yield is now just under 4.29% and up 4 basis points from this time yesterday. And the price of gold will start today up another $9 at $2,412 an ounce. And oil prices are 50 US cents firmer at just on $77.50 a barrel in the US, while the international Brent price is just on $81 a barrel. And the Kiwi dollar starts today softish, down another 10 basis points at 59.4 US cents. Against the Aussie, we're up 10 basis points at 90.1 Australian cents. Against the euro, we're down 10 basis points at 54.8 euro cents. That all means our trade-weighted index starts today at 68.4 and down a net 10 basis points from yesterday. And the Bitcoin price starts today at $66,573 and up 1.1% from yesterday. Volatility over the past 24 hours has been modest, though, just on plus or minus 1.2%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.